Welcome. It is great to have you here with us today.
It's good to be here.
When we usually talk about the automotive industry, we're picturing assembly lines, roaring engines, maybe the smell of new tires or the shine of a showroom floor. But today, we're looking at the engine behind the engine. We're looking at the invisible force that actually makes the wheels turn. We're talking about the money.
Exactly. And not just money in the abstract. We are looking at cost financement, or, Koçfinans.
Right.
And what's fascinating here and why we chose this for a deep dive is that we aren't talking about a traditional bank with marble lobbies and branches on every street corner.
No.
We are talking about a highly specialized digital financing engine that has been quietly powering a massive chunk of the Turkish automotive sector for, 30 years now?
30 years. So we have the 2025 annual report and the consolidated financial statements right here in front of us. And our mission today is simple. We are going to decode these thousands of lines of data for you, the retail investor. We want to see if the numbers match the narrative. Is this company as efficient as it claims to be? Or is it just good marketing?
That is the key question. In a world of complex finance, this is a company that stands out for its extreme focus. They aren't trying to be everything to everyone. They don't do mortgages. They don't do credit cards for your groceries. They do vehicles, and they do it digitally. So looking at their 2025 performance is actually a great way to understand the health of the consumer economy and the auto sector in Turkey.
Okay, let's unpack this. Let's first get to know the company a little, because I think people hear Koç and they assume they know the story. Big industrial giant, factories, smokestacks. But the structure here is unique.
It is remarkably different. So for context, Koçfinans was founded back in 1995.
Okay.
It was actually Turkey's very first financing company. They have a pedigree. They kind of invented this sector in Turkey.
Right.
But unlike the industrial giants in the group, like Ford Otosan or Tofaş, they don't have factories.
And they don't have bank branches either, right?
Yeah, correct. Their headquarters are in Üsküdar, Istanbul, specifically at the Çamlıca Business Center. But that is essentially their only physical footprint.
It's not just one office.
Exactly. They operate on a completely branchless structure. They utilize digital channels, their mobile app, their website, and they integrate directly at the point of sale at dealerships.
So it's a digital ghost, in a way.
Yeah.
A very profitable ghost. But who actually holds the keys here? Who owns the stock?
It is a Koç Group powerhouse through and through. The shareholding structure is very concentrated. Koç Holding owns 50% and Arçelik owns 47%.
47. Wow.
Yeah. The remaining 3% is held by other partners.
So 97% is locked in between the holding and the appliance giant Arçelik. That is a serious vote of confidence from the parent companies.
It really is.
It's not floated on the open market for us to buy shares of directly,
Yeah.
but it impacts the value of those parent companies heavily.
What about the leadership? Who is steering the ship?
The general manager is Yeşim Pınarkıtapçı. She has been in that role since 2013, which, that provides a lot of stability. Over a decade.
In the corporate world, having a CEO in place for over a decade means the strategy is consistent. And regarding the board of directors,
I was looking at that. It's always interesting to see how the top brass is compensated.
the 2025 report discloses that the total benefits and pay provided to senior management and the board was 77 million TL.
That is up from 66.3 million TL in 2024.
Yes. It's an increase, likely driven by inflationary adjustments, but it seems in line with the scale of the operation.
Now, here is the stat that blew my mind when I was reading the general information section.
I think I know which one you mean.
We are going to talk about billions of lira in assets in a minute. But how many people actually work there?
This is the efficiency part. This is the number that stops you in your tracks. As of December 31st, 2025, they have only 98 employees.
98. I know local coffee shop chains with more people than that.
Yeah.
And they are managing a balance sheet of,
Yeah.
well, we'll get to the size, but it's huge.
It is a lean and mean operation. It forces you to rethink what a finance company is. It's not an army of clerks. It's a special forces team. And the demographics of that workforce are interesting, too. 100% of them hold a bachelor's degree.
100%.
It's a highly educated, white-collar team. And in terms of gender balance, it's 52% female, 48% male.
That is refreshing to see in the finance sector.
Absolutely. They've actually been certified as a great place to work and received a 5-star agility rating.
I saw that.
They also have a mentorship program called Orange Wings, Turunku Kanatlar, which supports female engineering students. So culturally, they're positioning themselves not as a stuffy bank, but as a modern, progressive tech company that happens to lend money.
Okay, so we have a small, smart team in Üsküdar. But what do they actually sell? I mean, they sell money, obviously, but for what?
Their core business areas are laser focused. First and foremost, automotive.
Right.
That's new and secondhand vehicles. They have big collaborations with brands like Volvo, Ford Trucks, and Otokar.
Which are mostly Coast brands or partners.
Exactly. Then there is agriculture, specifically tractor loans, through a partnership with Turk Tractor.
And I noticed they are doing insurance, too.
Yes, through their subsidiary, KF Sigorta. This is a smart play. It helps them capture more value from the same customer.
Of course.
You lend the money for the car, and then you sell the insurance for the car. And they also do stock financing for the dealers and suppliers, keeping the whole ecosystem greased.
So if we look at the sector analysis and their market position, where do they fit? Are they the shark or the pilot fish?
They are deeply embedded in the ecosystem. In 2025, they actually boosted their market share. The report specifically mentions a strong performance in the last quarter, driven by a collaboration with Volvo, and they are very strong in heavy vehicles with Ford Trucks.
Okay.
They aren't just a participant, they are a key engine for sales.
Before we jump into the hard numbers, let's do a quick SWOT analysis based on what we've read,
Really?
just to set the stage.
Strength. Branchless efficiency, low overhead costs, and strong backing from the cost group. Plus, they have an advanced R&D center focused on AI. Weaknesses. Niche dependency. I mean, if people start buying cars, their business halts.
Yeah, that's a big one.
They don't have a diversified portfolio like a universal bank. Opportunities, a secondhand market, and expanding that insurance penetration we mentioned. And threats, macroeconomic shifts, inflation, interest rates. These things affect vehicle sales directly.
Okay, that sets the stage perfectly. Now we can move on to our analysis. Let's open up the financial statements.
Let's dive in.
Let's start with the size of the pie, asset growth. What are we looking at for 2025?
We're seeing massive expansion. Total assets skyrocketed to 55.6 billion TL in 2025.
And what was it the year before?
It was 31.9 billion TL in 2024. That is a huge jump. It indicates a massive growth in activity and lending volume.
That is nearly double. So where that asset growth coming from? It has to be the loans, right?
Precisely. If we look at the Finansman Creditary, the finance loans portfolio, it reached 49.3 billion TL.
Okay.
That is up from 27.6 billion TL the previous year.
Wow. So they lent out almost twice as much money.
Yes. And the composition is interesting. The vast majority is in Turkish lira loans, about 47.1 billion TL. But here is the key for the retail investor. Look at the maturity profile.
What does the maturity tell us?
35.6 billion TL of those loans are due within 1 year.
So they are short-term loans.
Exactly. This ensures liquidity turnover. They lend money, it comes back quickly, and they can lend it out again. They aren't stuck in 30-year mortgages. It keeps the cash flow dynamic.
Okay, so they are moving a lot of money. But are they making money? What's the bottom line?
They are definitely making money. The net profit for the period is 1.52 billion TL.
And compared to 2024?
In 2024, it was roughly 1.0 billion TL. So that is a 50% increase in profit.
That is solid. To use a metaphor, imagine running a shop where you sell twice as much product, but you keep your staff size exactly the same.
Right.
That is operational leverage in action.
That is the perfect way to describe it. Since they didn't have to build new branches or hire hundreds of people to manage that extra 20 billion TL in loans, the profit margin benefits from that efficiency.
And speaking of margins, how is the operational performance looking beyond just the interest?
Well, we mentioned KF Sigorta earlier. They generated 280 million TL in premium production. That is a nice chunk of diversified income that doesn't rely solely on interest rates. It shows they're successfully cross-selling.
Now, here is where it gets really interesting for me, and this is something I always look for in finance companies.
Yeah.
What about the people who don't pay back? With the economy being what it is, you'd expect bad debts to go up, right?
This was the aha moment for me in this report. Logic dictates that if you double your lending, your bad debt or non-performing loans, NPL, should also roughly double or at least increase.
Right.
But look at the notes. The NPL amount actually decreased.
No way.
It went down to 532,747 TL. In 2024, it was 596,287 TL.
Wait, hold on. I want to make sure I heard that right. They lent out 20 billion TL more, but their bad debt actually went down in absolute terms. How
Yes.
is that even possible? Is that magic?
It implies two things. One, they are lending to extremely high-quality borrowers.
Hmm.
Being part of the COSISI ecosystem helps there. Selling to corporate fleets, trusted partners, people buying Volvos and Ford trucks generally have better credit.
Okay.
But two, it validates their investment in technology. They are using AI-driven credit scoring. The algorithm is working. It's picking the right people to lend to.
That is incredibly impressive. It really shows that the digital engine isn't just a buzzword. It's actually filtering risk better than a human manager might.
Exactly. It's precision lending. Now let's look at cash flow and liquidity. Cash and cash equivalents dropped to 1.25 billion TL, down from 1.69 billion in the previous year.
Is that a red flag? Running out of cash?
In this context, no. Remember, they are a lending company. Cash sitting in a vault earns nothing. Cash turned into a car loan earns interest. The fact that their cash balance dropped while their loan portfolio exploded tells me they deployed their idle cash into high-yield loans. They're putting the money to work efficiently.
Good point. Cash is inventory for them. You don't want inventory sitting on the shelf gathering dust.
Exactly.
But where do they get the money to lend? If they don't have depositors like a bank, who is funding this 55 billion TL machine?
That brings us to the liability side. They are funded primarily through bank loans and issued securities.
What are the numbers there?
Bank loans jumped to 37.4 billion TL, up from 22.4 billion, and they have about 9.8 billion TL in issued bonds and asset-backed securities, VDMK.
So they borrow from big banks and then lend to us to buy cars.
Essentially, yes. And because they are a finance company, they are highly leveraged. Their net debt is high relative to equity.
Okay.
But the report specifies they use hedging, specifically swaps, to manage currency risk completely. So even though they have foreign currency borrowing, they aren't exposed to the fluctuation of the lira.
That is a critical safety net. We've seen companies go under because they borrowed in dollars and earned in lira. It's good to know they are hedged.
Very good to know.
What about the shareholders' equity?
The paid-in capital remains steady at 100 million TL. The registered capital ceiling is much higher, but they haven't needed to tap it.
Okay.
The growth in equity, which is substantial, is driven by retained earnings. They are making profit and keeping it in the company to fuel that lending engine.
Earlier you mentioned they have an R&D center. I don't usually associate research and development with a loan company.
I know, right?
I usually think of that for like pharmaceutical companies or tech hardware. Where is that money going?
This is a key differentiator. They are actually the first finance company in Turkey with an on-site government-certified R&D center.
The first?
The first. The 2025 report highlights their focus on AI for credit decisions, which we saw paid off with the NPL numbers, and contactless loans.
Contactless.
It means the entire process, from application to money in the account, happens without human intervention. They are also using software robots RPA for back-office tasks.
That explains how they stay at 98 employees.
Yeah.
The robots are doing the paperwork.
Exactly. It's process automation. It allows them to scale volume without scaling costs. If a traditional bank wants to double its loan volume, they usually have to hire more staff.
Yeah.
Koçfinans just turns up the server capacity.
Okay, so we've looked at the past and the present. Let's look at the future outlook and management commentary.
Yeah.
What is the vision for 2026?
The management's message in the annual report is very clear. The focus is customer-oriented innovation.
Right.
They want to deepen the ecosystem approach.
Meaning
They don't just want to be the guys who write the check for the car. They want to finance the dealer's stock, finance the insurance, finance the secondhand sale of that same car 3 years later.
Yeah.
They want to capture every financial transaction in the vehicle's life cycle. They want to be the default operating system for buying a car in the COSI ecosystem.
It's a sticky web.
It is. Now, we have to look at the footnotes and critical disclosures. We always say, the devil is in the details. What stands out to you?
Well, the related party transactions are massive.
They are. A significant amount of their business is within the cost group. They borrow billions from Yapı Kredi, another coast company. They lend money to people buying Ford and Otokar vehicles manufactured by coast companies.
On one hand, that provides incredible stability. They aren't going to get cut off by their main supplier.
True, it's a huge advantage, but it also shows a heavy dependency. If the Coast Automotive Group has a bad year, Koçfinans has a bad year,
Right.
They are inextricably linked. It's a concentration risk that an investor needs to be aware of.
And we should mention the auditor opinion.
Yes, the report was audited by Guni Banyamses Denitum, that's EY Ernst& Young. They received a clean, positive opinion.
Good.
No accounting irregularities found. That is always the first box you want to check as an investor. If the numbers aren't trusted, nothing else matters. Here, they're clean.
So let's bring this all together. Koçfinans in 2025. It feels like we are looking at a very sleek, high-tech machine. They doubled their lending volume, increased profit by 50%, reduced their bad debt ratio, and they did it all with fewer than 100 employees.
It really is a case study in digital transformation.
Yeah.
They have moved away from the heavy branch-based model of traditional finance and embraced a lean, algorithm-driven approach.
Yeah.
They are efficient, profitable, and growing.
But, as always, we need to leave our listeners with something to think about.
The question for the investor is this. If we connect this to the bigger picture, banks are trying to go digital too. Every bank has an app now.
Of course.
But banks have legacy costs, branches, thousands of employees, old IT systems. They're like massive oil tankers trying to turn around. Koçfinans is a speedboat built purely for this niche.
That's a great image.
But the question remains. As vehicles become more expensive and digital buying becomes the norm, is Koçfinans actually better positioned than a traditional bank to capture the auto loan market? Or will the big banks eventually catch up and use their cheaper cost of funds to squeeze them out?
That is the billion lira question. Is agility enough to beat size in the long run?
We'll have to watch 2026 to find out, but right now the numbers say the speedboat is winning.
Absolutely. Well, that wraps up our deep dive into Koçfinans. We hope this helped you see beyond the logo and understand the engine underneath.
It was a pleasure analyzing this one.
If you enjoyed this breakdown, please hit that like button. It really helps the algorithm find other curious investors like you. Subscribe to the channel so you don't miss our next deep dive. And share this with a friend who thinks finance is boring. Prove them wrong.
And keep questioning the numbers.
If you want to support us making more of these videos, please consider evaluating our membership options. It goes a long way in keeping the lights on here. You can also show your support directly with a super thanks right below this video.
We appreciate every bit of support.
Thanks for listening. Keep learning, keep analyzing. We'll see you in the next one.